Welcome to the new weekly outlook, everyone. As always, we're going to quickly go over the fundamentals and then move on to the technical side for gold and GJ. So we have a lot happening this week that we need to catch up on. And then also from meeting perspective and macro fundamentals, there's a lot that's going to happen. So we need to keep our eyes on as well. So I'm going to start off with some macroeconomics first, where the World Bank cuts 2022 global growth outlook on Russia invasion. So you guys can go ahead and read through the entire article, but I'm going to give you a quick summary on what's going on here. So the World Bank's purpose, for those of you who are not really sure, is to provide economic and financial support to the lower income nations and help them improve their standard of living. So for COVID-19, a lot of these nations were hit pretty hard. And the World Bank stepped in and announced a $93 billion replenishment package to help the lower income countries. And now the World Bank plans on mobilizing a $170 billion package to help nations deal with the rising energy prices, the war-related consequences that their citizens may be enduring with, inflation, debt, etc. So they are planning on mobilizing a funding package that's a lot bigger than the COVID-19 response package that they had announced previously. Hence, we're also going to see a lower economic growth in the coming months. So they have lowered their estimate for the global growth into 2022 to 3.2%. from a January prediction of what they had at 4.1%. So it's not a massive drop, but it is still significant enough, which is showing us a good enough picture and an outlook for the coming months and what to kind of expect. So as we continue down, this is where they're expected to discuss a new 15-month crisis response package of about $170 billion to cover April 2022 through June of next year with the bank's board in the coming weeks. So this week, the World Bank and the IMF are going to be meeting up, and they're going to be talking about all sorts of different factors that are going to be impacting a lot of these lower income countries and also a lot of the other nations, especially with whatever's going on with Russia and Ukraine. So this week they're supposed to meet in Washington, where they're going to talk about inflation, debt, shock of Russia's invasion of Ukraine, and food security and all those different types of topics, which are going to be affecting the world economic growth in general. And then this week, again, is going to be very, very important for the macroeconomics as they're going to be meeting. So we really want to pay attention from, Thursday, Friday about whatever these central bank governors are going to be coming together, central bank presidents and central banks in general are going to be coming together. World Bank and IMF, they're all going to be coming together and kind of discussing these topics. So this is one of the things that we definitely want to watch out for. Now we're going to move on to the geopolitical side. So Russia started to attack the east side of Ukraine, and now we have news that Russian forces had begun the campaign to conquer the east side region while moving the troops and material further into that part of the country. There are more strikes that are going on. So as we continue down here, we start to see that there was a deadly strike that was reported while air raid sirens were heard in the capital for a second day. So we know that more strikes are continuing. The war is continuing into almost a third month of this war now. So the markets have, for the most part, already priced in a majority of these geopolitical tensions, but the tension now has shifted to the impact of this war on the rest of the global economy. So for example, energy prices are rising and how the nations are dealing with that, the potential interest rate hikes that we have been hearing about and how the consumers will be reacting to that, inflation increase and things like that. So now those are the things that we want to be paying a little bit more attention to, because for the most part, we know that the war is going to continue on. It's been almost 3 months, going into the third month, actually, of this war. So the market has, for the most part, already priced all of this in. Now the attention has shifted to how this is impacting the rest of the economies and the rest of the world. Now we're going to move on to the US side here. So what we see is Fed's Bullard says 75 basis point hike could be option if needed. So as we have discussed multiple times in the past, that just because there's an interest rate hike, it does not mean that there's market optimism. The economic conditions must support the rate hike to maintain the investor confidence. And the most recent example that we saw was of the pound, where we did see an interest rate hike, but the economic conditions were not there to support it. And that's why we didn't see a massive push up in the pound right when the interest rate came out. Instead, we saw the market take that in a negative way. So now, so far, what we have been seeing is the sentiment of potential 50 basis point hike in May from the Fed due to the high inflation data. But now what we have is a potential option of a 75 basis point hike. This does not mean that they're going to do it. This just says that there's an option of this if need be to hit our goals. However, what we need to do now as retail traders and investors in general is pay close attention to the consumer and business behavior. We're already seeing signs of uncomfortable consumers from the last interest rate hike, and more as there is a sentiment of potential hikes. So that's why we already have an idea that the economic conditions are not there to support a 50 or 75 basis point hike just yet. And if anything, if we end up having a 50 or 75 basis point hike, we could see the consumers getting a little bit more conservative, which could lead to potentially, in a couple of months, needing more quantitative easing or injection of money in the economy to help the consumers not become so conservative and also motivate them to go out and spend more money and kind of make this a little bit more affordable, or just maintain at the 25 basis point hike, which we have been getting so far. This sentiment is supported by this article right here, where the US home buyers are getting discouraged by rising rates and prices. So we're starting to see a drop of enthusiasm in the home buyers. The confidence is still there, where right now, we have 71% of these respondents saying that they thought buying property in the zip code was a very good or somewhat good investment. But, last year we saw a 73.6%. So, it's not a massive drop, but we are starting to see some signs of this enthusiasm dropping down. This is important because real estate is one of the most important factors in an economy, since that is one of the largely sought after asset for wealth generation. So if you want to go take a look at what's happening with the consumers and what their behavior is like, what's the enthusiasm like, this is one of the areas I would go to. And especially I would look at how many consumers are starting to default on their loans. A lot of people will go out and get loans on things that they cannot afford when the interest rates are low. But once they start increasing and the consumers cannot afford them anymore, you will start to see people defaulting on them. Now, the final one for macro fundamentals, we have Bank of Japan here, and Bank of Japan's governor steps up yen warning to stave off stimulus doubts. So far, what we have been seeing is the yen weakening significantly these past few weeks as Bank of Japan's governor maintains the accommodative stance on the monetary policy. He continues to say that he's going to provide stimulus, more monetary stimulus into the economy to support the economy. And remember that the yen is a safe haven currency, yes, and that many investors move to it when they feel uncertainty with the US dollar, but it is also its own currency and economy. So we have to keep that in mind and evaluate it accordingly. So currently, the Japanese economy is extremely weak and it has been losing its strength significantly. And while other nations are increasing their interest rates, we have Bank of Japan still maintaining the extremely low interest rates, which is making it less attractive to investors. So as you continue down into this article, specifically down here, we're starting to see that a lot of other central banks outside of China are stepping up the pace of interest rate hikes, but yen is not doing that. And that's the principal driver of the downward pressure on the yen. So some members of the central bank of Bank of Japan think that adjustments may be needed to increase the rates and help rebuild the confidence in the economy. But there are still a lot of people who think that they're going to maintain the current conditions, monetary policy conditions, until the end of the current governor's term. So we're going to monitor the yen's movement closely over the next few weeks and months and kind of see where it's going. But right now, as an economy, as a currency, the yen is super weak. Now we're going to go on to the economic calendar side. So this week we have started off quite easy. We had some bank holidays even today. So today kicked off the IMF meetings, which I was talking about here shortly, just a little bit ago. And so this is where the IMF and World Bank are coming together. They're discussing, some of the things that we just talked about, debt, inflation, food security, all of that. and they're coming together and they're trying to figure out, and this is where they're going to talk about that $170 billion package and kind of figure out how to help these countries that are being affected by the high energy prices and inflation caused by these geopolitical tensions. Now, continuing down into Asian session, as you can see, we don't have much coming out, neither in pre-London. So now and tomorrow in London session, we don't have anything coming out either. So going into New York session tomorrow, you have housing starts, you have building permits. So all of this is going to support the home buyers article that we just looked into. If you're trading the US dollar, this is something that you want to kind of start paying attention to, just so it can give you a sense of outlook in the real estate industry. And also, what does that essentially mean for the consumers? If people are no longer buying homes, which is not happening right now. There's a lot of people still going out and buying homes, but they're not able to afford them. You will start to see some of these numbers dropping because the supply will be there, but the demand's not so much there. So right now it's not the case, but you're going to start to see some of these numbers fluctuating, which is going to give you some sort of an understanding of what's happening. Then we also have IMF meetings tomorrow. It's day 2. So same thing, kind of pay attention to what they're saying and what's going on over there. And then as we continue down for the rest of the session, not much coming out. So tomorrow's going to be quite easy when it comes to economic data. If anything, I'm going to be paying most attention to building permits and IMF meetings. Then going into London session on Wednesday, you have some Euro news coming out, but that's about it. And then after that, in New York session, it's going to be mostly the Canadian dollar news. So if you're trading the Canadian dollar or if you're trading USD CAD or anything like that, this is something that you want to pay attention to. Again, CPI is inflation from the consumer's perspective. And then as we continue down, existing home sales, so more real estate news for you guys. And then IMF meetings continue. It's this entire week. Thursday is when things are going to start getting a little bit more interesting, and specifically in the New York session, where you have the IMF meetings, but you also have Governor Bailey and then ECB President and Powell speaking. And they're all speaking at, right here, they're all speaking at the same IMF meetings that are going on. So due to speak at Macro Week 2022 in Washington, D.C., same thing here, spring meetings of IMF and World Bank in DC, and then same thing here as well. So this is when things are going to start to get a little bit interesting. I do expect the markets to show some volatility, and that's what I'm going to be watching out for. And then we also have consumer confidence coming out from the pound, and then you have the national core CPI from the yen, and then flash manufacturing PMI coming out as well. And then in pre-London session, on Thursday, you have retail sales coming out, which leads us right into that London session on Friday, where you have some Euro news coming out here, some flash manufacturing and services PMI. So if you're trading the Euro, this is what you want to pay attention to. And then we have same thing for the pound. So if you're trading the pound, this is what you're going to pay attention to here. And then as we continue down in New York session, we have the flash services and manufacturing PMI coming out there. So these are some of the things that you guys want to pay attention to. And again, on Friday, you're going to have ECB president speaking. And then as we continue down, you have the IMF meetings still continuing. And then also right here, Governor Bailey speaking as well. So mostly this week, we don't have a lot of economic data, but Thursday and Friday are going to be important as some of these central bank speakers, come forward and they kind of talk about their conditions, their outlooks at these IMF meetings. But of course, the IMF meetings in general this week are going to be on the top of the priority list. Now, moving on to the technical side, we're going to start off with the yearly here. So what we see is price pushing up with a lot of bullish momentum. Again, remember, this is happening because of the weak yen, right? So yes, the yen is a safe haven currency, but again, it's its own economy, and right now it's extremely weak. So what I'm going to actually mark off here is going to be this level right here. So that means if price were to flip below this 155,500 area, then that means that this yearly candle is also going to be flipping bearish, and we can have some potential swing to even position trade opportunities that we can target. So if price does end up flipping and continuing below that for the rest of, let's say, a couple of months or so, then this is what we're going to be targeting first, this 152 area flat. But again, for this to happen, it's going to take a couple of months, and it's going to take extremely, extremely weak news from the pound for this yearly candle to be flipping. Right now, we're extremely bullish, and there's nothing really stopping it from coming all the way up into these support areas right here. So this is what our target is on the yearly time frame. And again, this is mostly for people who are looking for position trades because this is a massive range. Of course, as we drop down to lower time frames, you're going to start to see some of the cleaner levels that you can target if you're scalping, day trading, or swing trading. But this is for people who are looking into holding onto their swing trades even longer. So this is about an 800 pip range for you guys. Now we drop down to the quarterly time frame and take a look at what's going on over here. So on the quarterly time frame, this quarter, we started off quite bullish, no bottom wick at all. The current candle is still pushing up with no top wick either. A ton of bullish momentum. And right now we're kind of headed, I'm actually just going to adjust this level down here instead of drawing on more lines. So right now we're headed right into this 172 area. Is what I would mark it off as. So that's kind of what we're headed at. There's really nothing stopping us on the quarterly time frame from going all the way up top there. And we have held onto a support area right into this consolidation. So held onto that support and just continue the bullish momentum. So right now, there's no signs of selling GJ from some of these higher time frames. Now let's drop down to the monthly time frame. So on the monthly time frame, we're breaking above this resistance of 155,500. You can mark it off as 156. If you want to round that up. So 156 resistance, we broke out of it last month, closed bullish. This new month, no bottom wick, again, barely a top wick, nothing at all, and price is pushing up bullish. So what's another minor level that you guys want to be watching out for? It's going to be, we've already passed up this level right here. So when we drop down to lower time frames, you will see how price has been reacting here as well. So when we drop down to the weekly, daily, and all of that, and this is that 161,800 level, right? So this is something that we can pay attention to. I'll mark it off as red. And then another level that we're kind of approaching right here. And then after that, there's really nothing stopping us from going all the way up to 172 flat. So this is going to be that 167,600. So this is our range at the moment. Price is clearly pushing above this, continuing bullish. We have a pretty good range to start looking for some potential swing trade opportunities for about 160 pips. So this is something that I want to pay attention to. I want to see, is price going to just tap into this and retrace, probably to correct this entire bullish move up, or are we going to continue tapping into 172 and then we'll see a retracement of this bullish momentum? Because remember, price does not just continue pushing up bullish without correcting itself. So here, and then you saw consolidation. So there's two ways that the market collects orders: retracements or consolidation. This is consolidation that we just saw. We're seeing a nice bullish push up. So at some point, I do want to see a retracement before we continue pushing up bullish. And that's if we are to continue pushing up bullish, because this is the last high that we saw in 2015, right before this whole Brexit thing went down. And then the pound just lost its strength. Now let's drop down to the weekly time frame. So a couple of weeks ago, we had that bearish candle close and then we started pushing up bullish. This week, we already made that bottom wick rejection and we're pushing up bullish here. So if you want, what I'm going to do is actually just draw out another level right here, which is going to be the exact point where this weekly candle would flip back down bearish. So when we drop down to the daily and 4-hour time frames, I would want to see some break and retest, which is going to give you that good opportunity to the upside. So this is how I would normally mark this off, because I know that if I'm looking for any buy opportunities, I'm good for any buys as long as price is above 165,100, and the weekly time frame is also going to be bullish. But as soon as this candle flips, I'm going to be looking for sell opportunities. So when I drop down to the daily time frame, we saw a break and retest here. And then about 2 days ago, we saw the candle closing bullish. The last daily candle closed almost like a doji, and the current one, no bottom wick whatsoever, and it's continuing up with a lot of bullish momentum. Let's take a look at what happened to the left right at this level on the daily time frame. So currently, we're sitting at this level that price has respected as support, resistance, and then you saw a nice sell-off, and price has reacted at this level previously. So that gives me confidence that as we start to see this break and retest a couple of days ago, and the current last 3 candles are pushing up bullish, that we have finally broken above that level. We have enough orders to continue pushing up to this 167,600 area. Drop down to the 4-hour time frame. We saw a nice retracement, and then prices are pushing up bullish. So now what I need to see in the next couple of candles is some sort of a break and retest formation, something like this, so we can see a continued bullish move up. If not, then there's a very high chance that we could become overextended after tapping into some of the minor levels to the left. So just check to the left. We can tap into some of those and then see some sort of exhaustion and sell off back down to around 165,500 to 165,100, and then a continuation back up. So I need to see some form of break and retest on the 4 hour or the 1 hour. So on the 1 hour, same thing. We haven't gotten any break and retest ever since price broke above this area right here. So we have that one minor one, which is right at that level. But after that, we've been quite bullish and we haven't seen any sort of break and retest yet. So I want to see price pulling back and then continuing back up. Because price has been so bullish off of the daily and the 4 hour, I definitely want to see a break and retest at the very minimum on the hourly time frame. So break and retest on a 30-minute or 15-minute wouldn't just do enough. So even on 30-minute, as you can see, it's overextended. It wouldn't be enough. I want to see a break and retest at the very minimum on the 1 hour or the 4 hour. Now let's move on to gold and quickly break this down. So on gold, some of the levels that I want to mark off are going to be this support. So let's just call it 1830 flat. So that's that support here on the yearly. And then we also have this resistance that price has tapped into twice already. And we'll call that 2070. And then I will also mark off this lower right here. So that top wick rejection that price is pushing above. If price breaks below this, then we can look for potential sells coming back down to around 1900. But this is one of the levels I would mark off here as well, which is going to be 1960. Then we drop down to the quarterly time frame. So we see how price has rejected that. And then we had a nice little sell-off, held onto a support that price tapped into a couple of times, and then saw a nice bullish push up. At the same exact level, price made that top wick rejection, came back and closed below it. This quarter, we made a little bit of a bottom wick and we're pushing back up bullish. So I want to see that bullish momentum continue as we start dropping down to lower time frames. If not, then the next area of target is going to be 1900 for some sell opportunities. Let's drop down to the weekly time frame now. So on the weekly, we saw how price held onto this resistance on the monthly and weekly, and then came back down, held onto it as support. The current weekly candle just reacted off of this little resistance, made that top wick and came back down, and it's almost like a doji at the moment. It's still the beginning of the week, so we still have some good volume that we can watch out for. If anything, I would just mark this off as another zone and then see how price is able to break above it. If it's not able to break above it and we kind of just range here, these are going to be quick scalp opportunities. I'm not looking for a swing trade unless price breaks below 1960, and then we're headed back down into 1920, 1910 area for potentially 400 pips, which is very doable as well. I go on to the daily time frame. So what I see on the daily is price held onto this support area, consolidated for an entire week, finally, or multiple weeks, and then finally price broke above it. We got a little break and retest. Last daily candle closed rejecting this. The current one just made a bottom wick rejection. So if I were to narrow this in and even look for a scalp buy opportunity, this would be my resistance area. Once price flips and breaks above that, I would look for a buy opportunity going all the way up into this zone and potentially even coming up and filling this wick for about 100 or almost 200 pips. So that's what I would be looking for. I want to see this daily candle flip bullish. So then that's bullish. And then I can drop down to the 4 hour time frame. That support is already made. This current candle is pushing up. So as that one, the next one starts forming and pushing up, that's when I would look for a buy opportunity. If I were to draw it out for you guys exactly of how I'm looking for an entry, let's say this current candle closes like this, or maybe closes above this area. I want the next one to make a bottom wick rejection and then start pushing up bullish. As that happens, you have a potential entry on this candle, and then the following candles just take you right back up. If you get a break and retest above this area, it's even better. That would be a more ideal entry that I would be looking for, something like this. And then the next candle is what takes you right back up. Something like this is what would give me more confidence for the following candles to continue pushing up bullish, and we can come into this 2000 mark without any sort of problem. So that's essentially what I'm looking for. So either an entry on this candle here or the following candle here. If I take an entry on this candle, then I would be looking for a stop loss somewhere down here. But if I have an entry on this candle, then I can keep my stop loss a little bit tighter here, and then price continues pushing up. So in order for me to get that, I need the daily candle to be on my side, and I also need confirmations from lower time frames, like the hourly, also continuing up bullish, potentially giving us some form of break and retest somewhere up top here as well, and then looking for some buy opportunities. So I hope this was helpful for you guys from a fundamental and a technical perspective. If you guys have any questions, just feel free to reach out to me on Instagram at SharmaFX, or just comment below and I'll try to answer your question as soon as I can. But other than that, have a great rest of the week, everyone. Trade safe and make sure you're not over trading or over risking or any of that stuff. I will see you guys on Wednesday for the live session.